What is going on, everybody? And in this video, we are giving you a state of the market and stock picks for July 13th, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this phenom market. So with that being said, state of the markets, we all know and well aware that CPI, core CPI is out tomorrow. I think those people that aren't even regulars in the stock market probably are very well aware about about this report that's coming out tomorrow, as we are living through a very historical time. There is a lot going on, and that core CPI, what we're really looking for, they're expecting about an 8.8% core inflation increase, so about 0.2% increase from the 8.6 on the last report. I myself am expecting over 9. We did have Fed members come out today saying to expect a very high inflation report. This is also why the market just decided to sell off towards the end of the day. It is very critical that if this report is anything over 8.6, that's at least opening the door for nothing but at least a 75-point basis move in the next meeting. Anything over 9, even at 9, I think you're looking at more like a 100-point basis move coming into the next meeting. This is strictly my opinion. Take it for what it's worth, but this is what I am looking at. Now, all that being said, I think we are going to see another big run on inflation. More so since Q3 is officially started. The thing is I think we still got another probably 2 months of pretty solid inflation. So I think the next report going into next month will also have some pretty high numbers. But I think from that point, we'll start dialing back. But again, the biggest thing here and why we're talking about recession is because, again, something I keep reiterating is that the Fed is front running these inflation these rate raises to combat inflation, and what it's doing is putting us into a darker recession is what we're looking at. Now they're talking about a 2023 recession. I think they're just doing that to essentially grease the skid, if you will. I'm probably not even saying that right. But essentially understand that I think we're already in it, and we're going to start seeing some impact more so on the back half of this year. And something I've talked about too is you have to understand the stock market is kind of the front runner for a lot of this stuff. Once all that inflation starts coming down, the stock market will start actually pushing back up and running. But the biggest thing is once we get an official recession that's going to scare a lot of people, and the market's going to crumble, in my opinion. And I think we're going to start seeing that here in the next coming weeks, starting with the report, then going into banks, then going into earnings mode, and then again the Fed at the end of the month. So it's really critical. Everything is very sensitive and very critical at this point on where we go. Now, it's not saying inflation is going to keep running and running and running. It just doesn't do that. It will dial back at some point. I think, again, towards the middle of Q3, I think we're going to start calming down a bit. Like I said, and then we'll have some higher inflation numbers in the next meeting, or the next CPI reports, and then potentially start coming back down from there. Again, I can be completely off on this, and we can come in at expectation or lower tomorrow. If that does happen, we're going to have a big rally from that point. But with the Fed won't be coming out saying that don't expect or expect a bigger inflation report tomorrow. So the market's a coupon is out to just start selling off. Now, from this point, again, this is setting up perfectly for a lot of different things. It's very rare to try to look at this in a positive light. It's very rare that you get opportunities like this, that you can get growth stocks that are like this. Now, growth might be stunted from what is currently about to happen, but also this is why I always say that you should go with stocks that your average person on the street could tell you who they are and what they do, because the next potential year or next potential 2 years could be very bad. It's something you have to be aware of. And the things I talk about, I'm not saying that they're in stone. And that's something I keep reiterating, is you have to understand what the possibilities are. Right now, we opened up today with the euro being at an all-time low for, I think it was the past 25 years, compared to the dollar, the strength of the dollar. The fact, again, that the dollar keeps running up and it started selling off this morning, but then started shooting up again towards the end of the day. That's not good for big corporations, especially big corporations that have a lot of revenue coming in from overseas. To convert that currency back over, they're losing a lot of money. So being said, there's a lot of issues. And today, I know Rivian, Tesla came out with a bunch of layoffs. They're starting to lay off a lot more people. So in my opinion, what's going to happen is you're going to see some real concerns here. We have to also be aware that a lot of the data that we're getting is lagged data. So being said, even though some of the numbers were looking good, it was just potentially a pullback, and then we had another burst in inflation, and that's what we're currently going through, but we won't see those numbers till possibly about Q3. So I think the recession that we're talking about in 2023 is actually going to happen. We're currently in, but it's going to get more deeper towards going into the fall in the Q3 earnings report. And then I think from that point, we'll hit a bottom. I think at that point we'll really hit a bottom once we hit peak. I think that because we'll hit peak inflation, and then we can start see where we go from there. I don't think it's going to be a clean shot back up to all-time highs. Again, with growth, we might see growth the way it's been over the past couple months, where it has spurts of pushes and then it sells off. And then you mainly value held us up at the beginning of the year, along with some financials. So that could be what front runs us going forward. But eventually understand that growth will get back to being growth, and we'll start really ripping. And again, this is all to try to gauge this is going to be extremely hard. This is why I do daily updates. Because stuff changes. The dynamic of the market, especially in this market, changes very fast. So it's really finding out what you need to be paying attention to and going from there. So again, tomorrow's going to be a huge day. Again, the fact that we heard from the Fed member talking about that tomorrow's report's going to be bad, I actually really expect this to gap down to overnight. I think premiums for puts tomorrow are going to be through the roof, especially if we get a bad report. And then again, I think we're going to be sitting close to that, getting around this 37.50. If we don't gap down past this tomorrow, I think that's where we're going to be heading, is at 37.50. And then potentially looking at this 100-point basis move here. I think it would be more reasonable for the market to kind of hold around here until the Fed. That kind of gives us another little rally. If you didn't notice, I'll go over Tesla and stuff, but Tesla is still holding. For how long? That's really going to matter, because if there's a massive amount of inflation, it could be a concern. And considering that we're in pre-earnings run-up, the market's really been trying to rip, and it can't. It just can't. It's really struggling to go. Every time I get push up, so it's getting nailed back down because of these reports of inflation. And again, if inflation is over 9, I think the market could potentially look really bad tomorrow. Then you could potentially hit full-on panic at that point if it's over 9. How deep in the 9s, it really just depends. There's no way of knowing. The Fed doesn't just come out and try to front run stuff unless they're concerned. So keep that in mind. But nonetheless, anything is possible. We could get a good report and start ripping up tomorrow as well. So just keep that in mind. So really looking where we end tomorrow. Again, we did a break. We could potentially even push back up to the 38.65, get a rejection after the break. and then start selling off at that point. I think we're going to hover roughly around this 3,800, potentially going into the Fed. If we aren't already there, if we don't get any new news from the Fed, if we get more information that the Fed is looking at 100 point, I think if we get a bad CPI, we're probably going to potentially go straight for the 100-point basis move, in my opinion. Again, if it's over 9 or something like that, I think we're going to head there. Otherwise, I think if it's over an 8.6, between 8.6 and a 9%, I think we could potentially head around this 37.50 tomorrow, gap down into that, and then see what the report gives us, and then adjust from there. But that's what I'm seeing for tomorrow for the index. Bitcoin obviously is going to interact with the markets. So not really going to go over this too much. Again, it's got some breathing room down to the 18K mark. So just be mindful if the market does start selling, you're going to see this cave. When there's panic, everything sells. It doesn't matter what it is. So just be mindful of that. So watching Bitcoin tomorrow, the dollar again skyrocketing. It's not slowing down at all. That's definitely not a good sign. So we'll have to see where this ends up in the morning from that point. Wheats are still selling off. Gold's just not doing hot. Let's look at Tesla. So the good thing at Tesla, it held the 687. Again, best company. It started talking about firing employees or letting go employees towards the back end of the day. So that's interesting to see if the market does gap down. Really watching that. I think the base here at the 625. If we do break this, the 684 tomorrow could get a nice run down to the 660. And then again, if it breaks that, the 625, if it breaks that, we're going to go start. You got the psychological numbers, the 550 and all that, but ultimately, I think it could be potentially heading for 5 after that point. So watching Tesla again, if Tesla starts doing bad or they do good on earnings and just continues to sell, that's your telltale sign. So watch out for that. Google could get some big wiggle room and get another big drop. I think Google can drop down to 2133. If it does break below essentially the 2253 tomorrow, if we open up below that, I think this could be a straight shot. Obviously, you have some support here at the 2206, but then you got that. I think ultimately you'll get a bounce here, and then I think it'll continue to sell down there, especially if we get anything over previous 8.6 in the report tomorrow. Shop, I do like Shop. I do play this on the short side today off this pump, but it plays the zones very well. Is one thing I do like. So we're gonna have to see how this does tomorrow. If this does gap down, he'll be sitting here right at the 30 mark essentially tomorrow, and then if it breaks that again. Some of these things are playing with these major supports. So if it breaks these major supports, you're really going to be in trouble. So again, if it breaks this 30 mark, it could start really free falling from that point. A lot of these companies are like that currently right now. Again, chips are going to be really interesting because you got TCM on Thursday before the open. So we got the report tomorrow. We don't just have the core CPI, we also do have the FO or the beige book tomorrow as well at 2:00. Again, I don't think that's going to hold as much weight unless something really comes of that. I think it's whatever is in that report is going to change anyway, pending on the core CPI. So I don't think it's going to hold as much weight. But this again, watching NVIDIA for a potential break here. Opens below, essentially roughly around the 180, 148 tomorrow. Again, you could possibly see the lows of 140. You've already bounced once. If this thing can break on the second attempt to try to break that monthly support at the 139 mark, does break that, you're going to see some heavy flushing. That's just the market in general is going to see some heavy flushing. We haven't hit 25% general on the index, so it's something to keep in mind. If we do get full recession, there's been some really nasty recessions where we've hit 50, 80% correction. So I'm not saying we're going to do that, but just be aware that there is a possibility of that. I'm not saying that it can happen, but just be aware that these are possibilities that you need to be, that could potentially happen. And so this is why I talk about risk management all the time, because these are possibilities that could happen. So Definitely want to watch the chips tomorrow. BA, absolute tear today. But we'll see. If it can't break the 148, this thing is going to start heading back down. And if it starts heading back down, I almost guarantee it's going to be at least be touching the 115, and then we'll see where we go from there. Again, general market sentiment is really going to play a lot into a lot of these different things. A lot of these things can pump off the news, but just be well aware if the whole general market starts to sell off, it's only a matter of time if this thing flips over and starts selling pretty heavy. So could be a potential good short if the whole general market starts really selling off. Can't break the 148 tomorrow, and then find out that we're back in this zone. This is very strong support because we've been chopping in here, but we finally got some news to break this thing out. So we'll have to see what happens there. But if it really starts to get fuel to the downside, value starts to really hurt. BA could be a play to the downside going into tomorrow. Airbnb. Still struggling. This is what I've been talking about. You get a breakout and then we just go absolutely nowhere. Technicals have been pretty much trash all year. This is why I said you need to be adjustable. I didn't play technicals a lot even before this year. That's why I use supply and demand. But this will be interesting. This again has been chopping around. Could potentially see the bottom again, 86. Again, if it does break back, every time we break out of these trends, it breaks right back in like it doesn't even exist, and it continues to sell off. So keep that on watch. TSM is on Thursday, so watching that. Now, banks is important. We try to break out. So we had a little trend line break and pop, but now, again, back at the bottom, we keep flirting with this 111 mark. If we do break that, things could get nasty. I think again, if inflation is bad, that's what really matters, because that's just going to mean the Fed's going to get more hawkish and more hawkish. It's not really going to matter about what's going on with the earnings at that point, because it's just the Fed against inflation, and everything else in between is going to get destroyed. So just be very mindful of that. Nothing else is going to matter at that point. So GS, again, it looks like junk. Bank of America looks like junk. I mean, they look like they want to break out, but like I said, none of this doesn't matter. If you have the Fed battling inflation, that is what matters, not what we want to happen in these technicals and breakouts. Again, or even supply and demand, it's going to continue to consolidate here till it gets a solid information. If it does break here, just realize that this has been consolidating for a while, so you're going to get a heavy flush out of here if that does happen. Which I've been, again, I'm very much a perma bull, but there's just a lot of really bad. I don't think we've hit peak inflation yet. Tomorrow will give us insight to that. Tomorrow's nightly updates will be different, or could play more into my theory that I think we haven't seen the bottom just yet, that we could start really flushing hard, because at that point you're starting to hit panic mode. If we start flirting with 100-point basis moves and flirting with inflation is over 9, people are just going to get sheer panicky. And then at that point, again, logic is out the window and things just start to really flush. But I think the good or positive point to that is that at the bottom of that flush, I think is where we can reverse this thing back up. Yes, the global economy will suffer, but the market is first in line to reverse and start pushing, while everything else continues to be bad. So just be mindful of that, and everything cycles very slowly. So just be mindful of that. So with all that being said, if you made this far, I appreciate you. Go ahead and drop a like button. Till next time, I'll see you guys later.